love the channel and find it useful in becoming a happy retiree. Subscribe today. A curious thing happened on September 7th, 2017. We're talking today about interest rates. They have been headed lower and lower for months, or had been headed lower and lower for months. July of this summer, 2.4%, then pressed furiously lower all the way down until around September 7th, bottoming at 2.0%. And then they've been higher ever since. They've been headed higher ever since September 7th. So what has been happening with this interest rate move? What happened on September 7th? Here we are towards the end of the month, and they've been trekking higher ever since. What happened on September 7th? That was the day Trump made a deal. That's the day Trump made a deal with the Democrats in Congress. Got everybody up in arms to extend the debt ceiling. That was the debt ceiling deal that blew everybody out of the water. Wait a minute. He's dealing with the Democrats all of a sudden. And what did that deal do? Well, it effectively extended the debt ceiling, so it avoided a government shutdown, and it also gave hurricane relief. Remember, $15+ billion to Hurricane Harvey victims. And that all happened in this, let's call it, reach across the aisle. So out of the ordinary for a Republican to side with the Democrats. And Trump is doing, though, by the way, exactly what voters expected him to do. The folks that voted for Trump expected him to be unexpected. He's not a politician. He's a business guy. He's a deal maker. Unpredictable. He's a negotiator. Now, I'm not getting political here. This is not what we do on Money Matters at all. But Washington has been driving Wall Street ever since the election. And in the past couple of weeks, though, these are perfect examples. The last 2 weeks, to be exact, perfect example of Washington driving Wall Street. And remember, Wall Street's not just stocks, it's stocks and bonds. So what is this big move higher in interest rates? What's it foreshadowing? All right, since the deal with the Democrats, 10-year Treasury yield, again, that's the proxy for lending really in the world. Yes, in the United States, but really around the world. And the bond market, everything relates back to what investors pay or get paid for owning 10-year Treasury bonds. That's the proxy for interest rates around the world, particularly here in the United States. So back on September 7th, the 10-year Treasury yield hit 2%. That's it. Now we're basically back to 2.3%. Now that might not sound like a lot, 2% to 2.3, but that's a big move. That's a 15% rise in interest rates. Everybody notices when the stock market moves 15%. Oh my God, the stock market was up 3% this week. The stock market was down 10%. Ouch. Nobody ever notices when the bond market moves that much. And that's exactly what has just been happening the last couple of weeks. The 10-year Treasury yield is up 15%. Nobody ever says to you, hey, do you know what the bond market moved 15% since midsummer? Or since September 7th? So there has been a stock market reaction, though, to this as well. And despite living through the most range-bound, placid week for stocks, that's the only word I could really describe this past week, by the way. The stock market this week was the tightest, flattest range that we have seen in any given week since 1972. It's the most flatlined we've seen it in over 40 years. But the Trump-related sectors, or Trump-related stock sectors, have interestingly moved a lot since that deal back in September, early September. Financials, by the way, since the deal with the Democrats, financial companies as a group up 5%, 5.2 to be exact. Industrials up 4.3% to be exact. Energy up 4% during that same period of time. We're only going back a couple of weeks. Well, what's the market done? Market hasn't done a whole lot since then. The S&P 500 is up 1.5%, but financials up over 5%, industrials up almost 4.5%, energy up over 4%. During that, just this short period of time, September 7th, when Trump made that deal. So very interesting that the Trump trade that was so prominent after the election, and even in the beginning of the year, has come back to some extent. Those are the Trump favored sectors. That's the Trump trade right there. Financials, industrials, a proxy for the economy getting better. Energy, a Trump sector, all showing signs of life again. Now, the polling on this is interesting. Again, we're not talking politics here. We're talking about the economy as it relates to politics and what's happening in Washington. Very recent Wall Street Journal poll, Wall Street Journal NBC poll, that tells us how Americans really are feeling right now. What are they thinking right now? Well, here are the numbers. All right. I don't need phone calls here yelling and screaming about what I'm about to say. I'm not being political. I'm just telling you what the numbers are. How do people in America feel about Trump on the economy? Well, 41% approve, so that's a decent number. 39% disapprove. Trump on North Korea, 36% of Americans approve, 43% disapprove. Trump, how about his usage of Twitter? 23% approve. Not a lot of folks. 2 out of 10. And I get that one. 66% disapprove. This is, again, Trump using Twitter. Trump on healthcare, 27% approve, 53% disapprove. Trump working with the Democrats to raise the debt ceiling and give hurricane relief, 71% of Americans approve of that. Only 8% of people disapprove. I know exactly what you're thinking, so I was thinking the same thing. I immediately thought, wait a minute, this must be some sort of poll that's just out in left field. It's only extreme liberals that even took this poll, right? So I looked through the data. I actually went back to I went through the articles, and you know how you can actually click on the data and you get to the actual document that nobody ever reads to see, wait a minute, this has got to be some sort of super biased poll done by Democrats. And the answers are probably biased, right? Because you've got lower Trump approval numbers for all these different categories, almost everything. And then all of a sudden, hey, working with the Democrats, 71% of people approve of that. But if you look at the data, the survey was actually really balanced, very balanced between Republicans and Democrats. Actually very balanced, in fact, even leaned more towards conservatives than it was liberals. And that was the actual data. So from where I sit, this is a poll that's actually telling us something. It's telling us that American voters, who we know care, priority number one, the economy, they want to see something get done. That's what this is about. They want to see Congress doing something. Americans are approving of any sort of progress when it comes to congressional dealings. And that has the Trump trade perking back up. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.